What's up, everyone? Nick Swizik here at Patriot Pacific, here with my dear good friend, Brandee Lee Crooks. She's a lender here at Patriot as well. Fun story, man. She, when I first got licensed in loans, she was one of the people that helped me out in the very beginning, and it's just really made a huge impact on my life. So it's great to be great to have you on here, and we're going to cover a really interesting topic. It's going to be reverse mortgages, also known as HECM loans, and just going over the benefits of them and some common misconceptions that people have about them. So tell me, what is a reverse mortgage in better words?
Oh, what is a reverse mortgage? Well, I'm stoked to be here. Mm-hmm. And I'm actually super excited to be talking about this because I think a reverse mortgage is such an amazing product that isn't accessed enough, isn't utilized enough, especially like in retirement planning and everything. So it's essentially a product that's available to anybody who is 62 years and older. And it allows you to use the equity in your home for financial planning, retirement planning, or even just not having a mortgage payment.
Okay. Yeah, it makes sense. There's a lot of misconceptions that, people that can benefit from the program, they'll come to us lenders and they're like, we've heard such bad things about that. But realistically, a lot of it's just old wise tales at the end of the day. And until you talk to a professional like yourself, you're never going to know what it's like. You know what I mean?
Yeah.
Or how it can benefit them.
I think there's a lot of issues tied to the term reverse mortgage, and we do call them HECMs also, which is what the home equity conversion mortgage. They're the same thing. So a HECM and a reverse mortgage are the same thing. But when they first came out, they were not the product that they are today. And I think at that point, a lot of people were hurt by those products. But that was in the 60s, 70s, and 80s. And it hurts me and pains me to say that was a really long time ago because in my brain it's like 20 years ago, but it's not that old. But yeah, so it actually, the product is completely different. It's been completely revamped, and there are guidelines and regulations that we have to adhere to, just like any mortgage. After the 2008 crash, the entire industry was revamped, and we have guidelines and regulations on forward mortgages, which is a regular mortgage, and then we also have the same thing on reverse mortgages, although those guidelines and regulations were put in place prior to that. Yeah. So there's protections in place now, and so I think the myths that you're talking about, that's just really what things used to be. It's what the product used to be. It's no longer what the product is. And so people kind of shy away from it because they're afraid of them. But this is really an amazing product. I mean, it's a product that, we have such a huge demographic of baby boomers, right? Baby boomers are the second largest demographic of people purchasing homes. That's huge news. So it's a great opportunity for us as loan officers and agents out there to really educate people on what this product is, which is why I wanted to do this with you. So I'm stoked about it.
Right. And what are some of the big myths that we, encounter, as loan officers? I hear a lot of them, like, I want to, leave the house to my heirs. Leads to a bigger question, is it the house or the equity you want to leave to it? So can you elaborate a little bit about some of the myths that we hear?
Yeah. So a really big concern about them, about reverse mortgages, is that you don't own the home. And just like you do with a regular mortgage, you do own the home. Your name is on title. This is a product. You maintain ownership of the property. With regard to whether or not you can leave it to your heirs, again, like you said, that is a really big question. It's like, are you looking to leave the home to your heirs, or are you looking to leave equity to your heirs? And really, that's a family question, right? That's something that you all want. Maybe if the home's been in the family for a really long time, you want to keep it. But either way, the answer is yes, you can leave it. You can leave the home to your heirs, or you can leave the equity to them. It's completely up to you how you want to kind of go about that.
Makes sense. Makes sense. And that's obviously why a lot of people are nervous of it, because they haven't had it elaborated or articulated in the way you just did. So I'm hoping that people that watch this video can watch that and get a better understanding and grasp of the program itself.
Yeah. And I think another big misconception about reverse mortgages is that they're concerned that the that the loan amount will outweigh the equity in the home at some point, or they're concerned like, what if there was a crash and I lost all the equity in my home? And that's a really big issue. Now, one of the things that's important to mention is that since the regulations and guidelines have been updated, the amount that a borrower can take from the home has been limited, right? So there's guidelines to that, and there's max LTV or loan to value amounts that you can have. And depending on how old you are, so I mentioned that you have to be at least 62 years or older. Let's say you're taking it out at 62 versus if you're taking it out at 70, what's available to you is going to be more. You're going to be able to pull more equity out at 70 than you would be able to at 62. So when you choose to utilize this product will definitely affect how much you're able to pull out of the home. But it won't affect the fact that your house does appreciate over time and that the loan amount stays the loan amount. It doesn't, once you have that amount, it doesn't continue to eat. Well, I mean, it has interest, right? Obviously, like anything, but it doesn't take away all of the equity, the remaining equity in your home.
Makes sense. Yeah, and and I know this about reverse mortgages, but some agents don't know, and a lot of the people that can benefit from it don't either. But can you sell your house when you have one? Just so we can get this out of the way and clear the air. Can you sell?
Yeah. So yes, the quick answer is yes, you can sell. What we see a lot of baby boomers, potentially considering right now is that, they want to make that transition. And so they want to they're considering at some point that they want to go from maybe a 2-story larger home to maybe a single-story 55-plus community, or, like just a home that, what I already say single-story, it's a single-story property, and maybe lower maintenance type of thing.
Yeah.
And yes, the answer is yes, you can not only sell your home, but you can actually use the product to purchase a home, so you can do a reverse mortgage purchase and not have a payment on your new home.
Interesting. This is going to be a good reference for real estate agents as well, because this can also benefit your business, and then it can also benefit the person purchasing. So talk a little more. How can you use a reverse mortgage to purchase a new home?
So this is super cool. So let's say let's say you own your home outright, or let's say you just have a ton of equity in your home. Let's say you have a $700,000 property and you have $500,000 of equity in your home. And a lot of times people will think they want to take that full amount of equity and put it down on a smaller property and just buy it out in cash. Well, what you can do is, let's say you take half of that equity and you use it to put down on a property, and now you've got your new primary residence, and the reverse mortgage purchase allows you to not even have to make a mortgage payment on that home. So now that you have got that property, you now can take the remaining amount of equity and use it however you want to reinvest it in other investments, stock markets, or whatever your financial planner recommends, or just keep it in your bank account because you want to make sure that you've got some, like a little nest egg there.
Yeah. So in theory, I guess what it would feel like when you buy with a reverse mortgage is you're buying it cash, because you're really not. But then again, you're not going to have a mortgage payment.
Correct.
And you get to keep half of, depending on how the numbers work, half of the proceeds that you got from the sale of your home.
Right. And you're still going to continue to gain equity and appreciation over time.
Yeah. So it's a way that you can diversify your retirement portfolio at the end of the day, right?
Yeah.
So talk a little bit about that, about, there's a lot of people that have, IRAs, Roth IRAs, 401ks, and, that's all variable. A lot of it's volatile, and we don't know what's going to be like in the next 10 years. No one does. But, and I guess you could say the same about the real estate market. But in terms of the real estate market, it has a track record of continuously going up. It's almost like a reverse downward slope. It's always trickling up a little bit.
Even when it goes down, it goes up, right?
Yeah,
over time. It's just how long you're going to be in that property.
Yeah. So talk about that, like in terms of the options that you have from diversifying your portfolio, like, how can that benefit you to utilize a reverse mortgage for a retirement?
So this is such a great question because, and I like to use kind of real world examples to explain it because I think it helps people kind of visualize it a little bit more. But let's say at some point that you're going to be or want to be in a continuous care community, right? And so you have got the property, you've got your asset, which is your home, and a lot of those communities have wait lists on them, right? So let's say there's a 1 to 2 year wait list on this community, but they require that you put a large payment down. Let's say $200,000 down payment down before the close and before you actually get the property in 2 years. So what you can do is you can actually utilize the HECM and you can pull that $200,000 equity out of your home, go ahead and put that down on the new property. You don't have a payment on that reverse mortgage that you pulled out. You can go ahead and set it up so that you don't have a payment. You are accruing interest, right? And we'll just go ahead and assume that all the closing costs and everything were rolled into the home. Well, let's say you sell that home later for $500,000, 2 years later down the road. Now, in the meantime, you're not making any payments. You now have secured the property that you want. You haven't had to cash out any of your IRAs or anything and paid taxes on pulling that out or any kind of prepayment penalties for that. And now you sell your home because you're ready to move into the new property, and you have that. Let's say assuming all of the costs, like $240,000 with closing costs, interest, whatever. You still have $260,000 in equity left in your home, assuming that it didn't appreciate at all when you originally pulled the loan out. So, and now you can still use that money and put it down on the new property if you choose to.
Interesting. And that all of this is, people just don't look into this, and it's a lot to take in for sure.
Yeah, I mean, it's such a great product. There's so many opportunities to use it. And not use it, right? And like you were talking about with the stock market and everything, I mean, this is an option that people can use to actually go back and forth, right? So let's say the stock market is doing extremely well, and you're pulling your income from that during your retirement, and that's great. But let's say the stock market starts to not do so well, and your financial advisor says, this is not the best time for you to cash this out. You need to keep it in here. We want it to grow some more. If you have a reverse mortgage, you can now pivot over to your reverse mortgage that maybe you haven't been making a payment on or you haven't been pulling any money from. You can actually pull money from that reverse mortgage as income, right? Or, to help you supplement your life. And now you can keep your money in your investments and allow that to continue to grow. And then let's say that the reverse happens, right? Let's say, okay, you now stocks are up and you want to start to pull from that again, you can go ahead and pivot back and you can stop taking money from your reverse mortgage.
I mean, there's just so many options with it. So that brings me to the question, most people have this general understanding, I call it conventional wisdom, that, reverse mortgage is essentially just, taking the equity you have and paying you monthly going against it. But there are different options for this. So tell me a little bit, what are the options that you can take in terms of a payment method or non-payment method when you utilize this?
So that's a great question, and I think one that we get asked often. So like I had mentioned a couple times, you can have the option of just not having a mortgage payment. My father has a reverse mortgage, and he has chosen to just not have a mortgage payment, and that works for him. And as his daughter, I'm glad that works for him, because as his daughter, I just want him to have quality of life. I want him to have a good life. I don't want him to be stressed about bills. I want to make sure he keeps his house. That's all important to me. I'm not worried about what's going to happen when he passes away, how much I'm getting. I don't care about that. But he's good, and that's what matters. On the other side of that, so there's that option, not having the payment. There's the option of saying, okay, we're going to calculate what amount for the rest of my life that I can pull from this mortgage. And let's say it's a supplemental $500 a month. That can go on forever, like 150 years. If you just live forever and you're super healthy and you just keep going, you can continue to get that payment. Whatever it is that we have to work the numbers and see what that looks like on paper, but you can continue to get that forever. Or you can say, okay, I want an amount for a specific period of time. And maybe that amount is higher, but then it's going to stop at some point. And you can do that too.
Yeah. Interesting. And, just from a general standpoint, who do you think, what kind of client can this benefit the most? So what kind of client can a reverse mortgage, how do I word this in a better way? Who can benefit from a reverse mortgage the most?
Pretty much anybody who owns a home, who has significant equity in their home, at least 50% or more equity in their home, and is 62 and older. You don't have to be in a position where you aren't making any money or you haven't had other retirement options. This can be something that you can utilize in conjunction with your current retirement plan. Okay. Let's say you are concerned that once you shift to a fixed income, that you're not going to have enough. this is such a great opportunity to supplement that income, to make sure that you are able to travel during retirement and have the quality of life, go out to dinner with your friends and not have to be so restrained by, a budget that you weren't used to before you retired. So it really is just a great product for anybody who owns a home and is over 62 and they have significant equity in their home.
Makes sense. So on a last note, obviously this was a lot to digest, but how do you prepare for one of these? How do you prepare for a reverse mortgage moving forward if you are interested in it?
Yeah. So the process is pretty simple and it's pretty similar to a standard mortgage. You basically would want to meet with us, right? Somebody who is an actual expert in reverse mortgages. Nearly every loan officer, most brokerages and companies have access to this product. I can tell you that a majority of loan officers don't understand the product. And I do think it's important to work with somebody who really understands the product, because if they don't understand it, then they may make recommendations that aren't in your best interest. So now now that you're working with a loan officer who understands the product, we want to sit down and really talk about what your long-term goals are. What are you trying to do with this? What is it that you want? And are you going to stay in the home that you're currently in? Are you planning on selling it? We really want to know what your, 2, 5, 10-year plan is so that we make sure we make the right decision for you. Once you do that, you're going to go to what we call HECM counseling. And then that's about an hour counseling. I suggest having any family members who might have concerns meet. They can either be in the meeting with us, or they can also or be there with you during the counseling as well. And the HECM counseling has been put in place to make sure that loan officers, shady loan officers out there, don't misuse the product, or even people who aren't shady making recommendations, or maybe they missed saying something like, yes, property taxes and insurance are still something that you do have to pay. So although I'm saying you don't have to make a mortgage payment, those are still things that is still a requirement of any loan, of any mortgage. There is a way to get around having to pay that monthly payment out, just like there is with an escrow account. So we want to make sure you have all that information. We want to make sure that no information was missed. And that's what the HECM counseling will do. They're not going to make any recommendations, and they're not going to give you any advice. They're going to give you information about the whole product.
Makes sense. So I know I said last note there, but just one more question just came to my mind as you were going over that. Do you recommend talking to a financial planner, putting your house in a trust? Elaborate a little bit on that when you're doing a reverse mortgage.
Yeah, so definitely. I think that it's great for financial planners to actually work with us as loan officers to truly understand this product and how it can help them help their clients, right? But definitely always work with your financial advisor to see what's going to be in your best interest ultimately, because we want to make sure that you're set and that your retirement is good to go, and we don't want to touch any of your assets in a way that isn't going to benefit you. But most importantly, and I would say this for anybody who owns a home, whether you're doing a reverse or whether if you own a home, period, that home needs to be in a trust. Because if God forbid something were to happen, we had COVID happen, people were, dying who we weren't expecting to pass away so quickly. Protecting your home from probate is such a huge important thing. If your home is in a trust and you have a reverse mortgage and you have an executor of that trust, it's going to be very simple, right? They're going to take that over. They have the opportunity to refinance that house, and you're good to go. If you don't have that set up, that is where you put yourself at risk to lose your home. And that's where now it goes into probate court. And during that time, if payments aren't being made, now you risk your home being foreclosed upon. So if you really want to protect your asset, whether it's with a forward mortgage or a reverse, I definitely recommend a good trust attorney, an estate planning attorney. And I have people that I can recommend that I trust to make sure that that's taken care of. But that's for everybody.
Makes sense. Yeah. I always say, if you don't have your home under a trust, it's like throwing a football to a receiver without hands.
That makes sense.
Yeah.
Yeah, that's true. Yeah, who's going to take care of it? Yeah.
But again, thank you so much for coming on.
Thanks for having me. I'm glad we could do this. Yeah.
Oh, man, a lot more to come. But, obviously, she knows her stuff. So if you have any questions regarding getting a reverse mortgage, her information is going to be down in the description and probably in the video. We'll see. We'll edit that in there. But Brandee Lee Crooks over here with me at Patriot Pacific. Tune into the next one. Take care.
Thanks, Nick.